Hi, BraVoCycles is here. I would like to discuss whether we should expect SPX and DAO topping soon. So let's look at SPX first. Let's look at some technical indicators. First, SPX over VIX ratio is really extreme above last July and September highs. And as a matter of fact, it's largest in last 20 years for which I had records. And it normally suggests that after high levels achieved in the SPX over VIX ratio, we get a nice correction within days or weeks. So it's bearish. Another bearish indicator is double negative divergence in New York Stock Exchange advanced decline line. So we had first this negative divergence for this push in SPX, and then even stronger negative divergence for this last push. So in intermediate to long term, that's very negative sign, but doesn't preclude another push somewhat higher before reversing. Also, the RSI and MACD are developing negative divergences, as you could see here with these yellow lines. So another pop in SPX and rollover would confirm a negative divergence, and it would be good indication of some intermediate term correction. Let's look at the Dow Jones Industrial Average next. It's a bit complicated chart, so let me take it part by part. First, notice that we have a valid 20-week cycle target in the 37 to 38,000 range, which is above January 2020 high, which is somewhat puzzling or intriguing. My basic assumption is that January 2022 high was at least supercycle high, if not grand supercycle high. So my primary count is black, that the initial drop to October 22 was an A wave, or perhaps red one. And then we had really nice A, B, and now C almost completed, where B was an expanded flat. The technicals in Dow are much stronger than in other indexes, as you could see with embedded RSI. So it's indicative of a wave 3 topping here. So based on Elliott waves and technicals, we would need some pullback in wave 4 and then another pop in wave 5 to complete the C wave. Now the question is where that 5 is going to end, below the pink line or above. If it is below, it could be either black intermediate B or red intermediate wave 2. But if it is above, then red count is eliminated, invalidated, and could be an irregular intermediate B wave of an expanded flat A, B, and then C below October 22 high. There is one more option that I don't give high likelihood now, and that's that October low, October 2022 low was primary 4 or intermediate 4. That this is possible ending diagonal 1, 2, 3, 4, 5. However, there is a limit for that ending diagonal. It has to complete below red line. It wouldn't be valid above red line. So that could be either primary wave 5 or just intermediate one of primary wave 5. But for now, looking at the cycle picture, I will defer further consideration of this bullish count, but it's possible. This is, for example, primary wave 5. Now let's look at the cycles. First, bigger picture. This is the range now from any week now in next couple of months where we could expect the peak of 2.2 year cycle, where previous peak was here in January 22. The second consideration is shorter cycles. 20 trading day cycle or a 20 or 4-week cycle is shown by these yellow vertical lines. It really didn't work very well. For example, the low of this cycle was here, and it wasn't really low. It was, it was overwhelmed by longer cycles like 80-day or 10 weeks and 20-week cycles. There are some. So the 10-week cycle is in the topping area. Could peak any day, within a week or 10 days, given allowed tolerance for variations. Regarding 20-week cycles, I have dilemmas where actually the trough was, whether it was here in late October or a couple of weeks earlier here at the beginning of October. In either case, so the first option, which is my preferred option, it was beginning of October, and it should top within 10 days or so. The second option, if the trough was at the end of October, it should top or peak in very early January. In either, also the 20-week cycle should have a peak here within few days, and then next one around the new year. So in either case, it is clear that based on the cycle picture, the Dow should peak, within 5 to 10 days, or perhaps in early January. So we will see how the Elliott wave picture develops and so on. And then intermediate term cycle low should occur somewhere in February, likely in second part of the February, where we have these multiple troughs, confluence of troughs. Well, that's it for today. I'll consider the longer term cycles next time. Well, if you like my video, please like it and share with your friends. You could follow me on X, former Twitter, at this handle. You could also follow me and subscribe to BraVoCycles Newsletter. At the landing page, you could subscribe with your email to free content, and you could also upgrade to 14-day free trial for premium content. Credit card is required, but it's not charged automatically, only if you eventually decide to upgrade to premium subscription. That's it. Until next time, and have a good rest of the weekend. Bye.